Wealth and Wisdom is brought to you by the Johannesburg Stock Exchange.
Hello and welcome to Wealth and Wisdom. With me tonight is Mike Brown of ETFs South Africa. Welcome to the show, Mike.
It's nice to be here. Thanks, James.
So, Mike, how old are ETFs in South Africa? I mean, they've been here quite a while.
Well, Satrix was the first one that started, and it was back in 2000, listed on the JSE with a product called the Satrix 40, which is an ETF that tracks the top 40 index. Now, you know what an ETF is. It's a share listed on the stock exchange. Instead of just buying one company, you're buying a portfolio, in this case of 40 shares. Satrix 40 track the top 40 index. So if you bought a Satrix 40 ETF, you actually own a little bit of all 40 of the top shares in the JSE. So that's what ETFs are all about. You buy an ETF and you get exposure to an index or an asset class. And it's a way of getting involved in different types of investments very simply through single products listed on the JSE.
So with an ETF, I mean, how big is the Satrix now? I mean, what are the assets under management?
Satrix is about 10 billion rand.
Okay.
In the ETF business in total, I think it's about 45 billion.
Okay.
That's quite a big industry. Yeah, it's quite a big industry, but it's a lot smaller than the unit trust industry, which has been around 60 or 70 years. And what ETFs really are, they are unit trusts, but they're listed and trade on the stock exchange, whereas a unit trust, you've got to go and buy it from the actual manager itself. So unit trusts are over-the-counter products. ETFs are traded through stock exchanges.
So the ETF market around the world, what are some of the things going on around the world in ETFs?
Well, ETFs much bigger worldwide than South Africa, which is interesting. The statistics we get indicate that 50% of all new money, particularly retail money going into investment markets now is through ETFs in America, in Europe, and increasingly in Asia. So most investors...
What's that about percentage-wise in South Africa? So,
well, in South Africa, it's about, South Africa is quite small. It's less than 10%.
Okay. So it's sub 10%. Yeah. So if we get up to international levels, I mean, you could see a massive growth in the ETF
Yes,
space.
there'd be a big increase in the space. And funny enough, South Africa is quite well geared towards ETFs. A lot of people say, well, the South African market's quite complex, so you need an active manager to go and outperform the market. Now, that's rubbish, because the statistics indicate that 80% of South African active investment managers, looking at the unit trust industry, fail to outperform an index. In fact, in many years, 90% of them fail to outperform an index.
80%? I mean,
80% on average.
80% on average.
Over a period of 1 to 10 years.
Okay. And I mean, where's that study from? I mean,
that study was published. It's on the ETFs website, but it's done by an independent guy down in Cape Town.
Okay.
And this stuff comes out quite regularly. So, in fact, what's happening in South Africa is that the market's quite efficient. You can actually buy an index tracker, like a top 40 index or an industrial index through an ETF. And because the market's so centralized, there's only about 40 or 50 shares that really trade in the JSE, you can buy those through an ETF. And it's very difficult for an active manager to mix those liquid shares and to outperform the market. So South Africa is geared very much for tracker funds. Yet it's very difficult to get them taking off in South Africa because the industry still has to get economies of scale.
So there's that quite interesting thing that we've got maybe 50, 60 shares that the guys can actually trade actively in because they're big enough for a decent size asset manager to do. And I mean, then there are thousands of unit trusts. So there are all these managers chasing after, thousands of guys chasing after the same sort of 50. Asset management a tough game. But, over the long term, surely a good unit trust, if you get one of the really good ones, you will outperform an ETF.
Well, let's take Satrix Indies, that was the industrial index. The industrial index is 25 companies. That excludes mining companies, excludes financial companies. So the Satrix Indy 25 is quite a well-known product. If you look at the last 7 years, and there's about 250 unit trusts that have been around over the last 7 years, general equity unit trusts. Where do you think Satrix Indy comes? You'd think somewhere in the middle. It doesn't. It's the third highest performing unit trust over the last 7 years. Over the last 5 years, it's the number one. The Indy. The Indy has outperformed all the equity unit trusts over the last 5 years.
Because the guys probably had some resource exposure, and in 2008 the resources got completely hammered, and that's then being...
That's part of it,
It's a sector choice,
But what it's also saying is that you can actually get an index like the Indy, which includes all the companies that are already performing now, because mining shares haven't performed and financial shares have only performed very recently. So you can buy industrial companies like SA Breweries and British American Tobacco and MTN and Naspers and all that, but you can buy them in index. You can just buy them in the Satrix.
So you can trade 25 shares with one click of a button at quite a low cost. I mean, it's...
Well, that's a big advantage of ETFs. instead of paying brokerage 25 times to buy each of those 25 shares, you're only paying it once because you're just buying one product. It gives you exposure to all those 25 shares. So you buy a Satrix Indy, you own a little bit of all 25 industrial shares. And you're outperforming most of the active managers. And secondly, or thirdly, your costs are low. Because an ETF has to have low costs, because otherwise it's going to mistrack the index.
Yeah.
So it has very low cost structure. And you trade it through the stock exchange, so you just pay brokerage, and all your settlement and transfer and electronic registration happens as normal through a normal JSE trade.
Okay.
So they're very cost effective.
So it's very cost effective, and you can get exposure to a whole basket of stuff all at once, one quite easy trade. And it's quite fascinating. So do you tend to need a brokerage account to do that?
You can do it through a broker, because ETFs are normal equities, trade on the JSE, so you can buy them through your stockbroker, or you can buy them through specialized platforms, and to mention mine, an ETFSA. You can buy any of the 57 ETFs that are listed on the JSE through
57 ETFs.
There's 57 ETFs and ETNs. The advantage we have is that we'll take small investors, and we can do debit orders. So a guy can put 300 Rand a month into one ETF, or 1,000 Rand into 2 or 3 ETFs, and we'll do that, and we'll take small investments. Stockbrokers typically want large investments because they're there to manage high net worth clients. We'll take small clients, and that's our business, is the smaller guy.
So we're with Mike Brown of ETFSA, and we're learning about the fascinating business of exchange traded funds and how they work in South Africa. So see you after the break.
JSE Safex style options, a great choice.